So good afternoon, everybody, and welcome to Pearson's Insight webinar number 12, Apprenticeship Finance 101. If this is your first Insight webinar, we hope you find it a useful experience, and if you've attended one before, then welcome back. If you've attended previous Insight webinars or downloaded the slides from those, you'll know that we've covered various aspects of the finance and funding side of apprenticeships before. With this webinar, we wanted to pull everything that you'll need to have on your radar as far as the financial side of apprenticeships is concerned into a single webinar. It's also an important time to start to get to grips with apprenticeships finance, as we are now a couple of months into a crucial 12-month period leading up to when unused funding will start to be taken back by HMRC. So there'll be more on that later. I also wanted to start by managing expectations and saying that although this is intended to be a fairly comprehensive presentation, it is not intended to be a substitute for tackling the detail around the various that you can find in the various guidance and funding rule documents issued by the Education and Skills Funding Agency. The situation with funding is undoubtedly complex, and what we seek to do here is to improve confidence and understanding around apprenticeships funding and the finance, allowing you to take the first steps in this area or establish areas in which you may need to find out more information. So who are your presenters today? Firstly, there's me. I'm Joe Abassi, and I'm the Senior Marketing Manager for Apprenticeships at Pearson, with a focus on employers. So I'll be the webinar host, but the main presenters this afternoon are Anne Ashworth, who is Head of Pearson Employee Apprenticeships and has been with us since 2016. She has therefore overseen the introduction of the levy and the new standards apprenticeships at Pearson, so has a lot of experience and insight she's going to share with you in this webinar. And Anne will be joined by Beth Briscoe, who is our Employment Tax Manager and is involved in the reporting and forecasting side of things for the levy and works closely with Anne in these areas. I'd like to also tell you a little bit briefly about Pearson and I suppose why we feel qualified to run these webinars and provide advice and information around apprenticeships. Not only are we an employer of apprentices, we're also a leading provider of apprenticeship services, along with being the largest awarding organisation in the UK. You may know us for one of our qualifications brands, such as Edexcel or BTEC. And we're also the owner of newer initiatives like the private university Pearson College, which you also may have heard of. We have 3,000 to 4,000 employees in the UK, and some of whom are apprentices. We'll have more of that on the next slide. So as I mentioned, we are an apprentice employer. And when introducing Anne, I mentioned that we have an established and growing apprenticeship programme. We launched in 2017 with 30 apprentices and have trebled that to 90 apprentices today, with a target of making it 100 by the end of the year. We have a mixture of old frameworks and new standards apprenticeships across 16 programmes ranging from level 2 up to level 6. And we primarily have Anne to thank for all this. So today's webinar schedule, Anne and Beth are going to cover the following topics. We're going to start by looking at how you can approach the levy strategically. We'll then talk a bit about the Education and Skills Funding Agency, or ESFA, and the role they play in apprenticeships funding. We'll have a look at the levy funding rules. We'll also explore the Digital Apprenticeship Service, or DAS, and we will also look at the transfer of funds, something that's come in recently. And we'll conclude by looking at the forecasting of spending, which is an important aspect of planning around apprenticeships. And then we'll wrap up with some Q&A and get a bit of feedback from you on the webinar as a whole. And just another reminder that you can ask questions throughout using the question menu, and I'll be keeping an eye on those in order to post them to the presenters at appropriate intervals. Okay, so at this point, I will hand over to Anne to talk about our first topic.
Good afternoon, everyone. Thank you very much for that introduction, Joe. Some of you will possibly know me from former Insight webinars, but today we just want to bring everything together for you in one go. A lot has happened over the year, and I can't imagine that any of you will not be aware of some of the major changes that have been going on. And the levy has been a major part of that, alongside the review of the apprenticeship content, the movement from frameworks to standards, the introduction of the Institute for Apprenticeships, and just the changes in terms of assessment moving to endpoint assessment as well. So at the moment, I think it's fair to say there's still quite a number of employers that have not got started. Some are still considering their approaches. Some are starting to work with providers around the country and are developing programs. And some, of course, have just decided that at this point in time, they will take it as a tax and they will pay it without getting involved in apprenticeships. So what did we do and what did we consider in Pearson when we were thinking about the levy? And I have to say, we started thinking about our approach to the levy probably in August 2016 and did a huge amount of work in the lead up to the apprenticeship levy going live in May, because we wanted really to go live right from the very beginning. I think at that time there was something like 70 apprentices around the country that were enrolled that month, and we had 10 of them. And we just felt that it was important to go with this and to see what it would do, and in terms of the business benefit. So for us, I think the key thing was that strategic consideration of the benefits of apprentices to us. Yes, we are a learning organisation, and so that brings with it some separate considerations. But really and truly, from a business case, there was a huge amount of positives in terms of actually running with apprenticeships rather than just writing it off. We wanted to think about the skills that we would need now, but most importantly in the future. We were thinking about the cost of talent, retaining talent, and also moving people through the business in terms of social mobility. One of the other key things that anybody needs to think about is, if you're an employer pulling down a levy, are you an employer that has the ability to actually deliver your training programs, or do you need to bring in external support? And we had that consideration as well, and we decided we would be an employer and we would actually procure training providers who could offer us the range, breadth and the variability that we wanted in our apprenticeship programs. And in doing so, you really do need to think about the implications. If you're going to become an employer provider, then you have to think about the cost of setting up a delivery arm, the expertise that you're going to need, and how you actually manage that delivery arm within your business. Where do they sit? What are their responsibilities? And how do they interact with the other parts of the business? One of the key things that we found very early on was the importance of working with finance. We're very lucky, because of the size of business that we are, that we've got a very, very strong finance team, and we've got Beth, who is our expert on employment law. At the time of actually going ahead with the levy, it was really critical to have a good understanding of HMRC, a good understanding of PAYE, to have a good understanding also of the ESFA mechanisms of allocating PAYE into the digital apprenticeship system. So actually that whole link with finance, absolutely vital from even before you get going on your apprenticeship delivery. But most importantly, that continued involvement of finance. I mean, Beth, I would say, is absolutely key member of the apprenticeship team. Couldn't do without her, because she is somebody that I can go to, I can ask her views on things, I can tap into her expertise. And, you know, to be honest, this is not a program that you want to do totally on your own. You need to tap into key expertise and specialisms wherever you can find them. So really, from a point of view of finance, important to keep up to date with all of the information and guidance that's coming out from HMRC and the ESFA on any changes that are going on in terms of PAYE, in terms of the way the digital apprenticeship system works. Things like the co-investment, for example. I think also one of the other things that you need to consider as you go live with your apprenticeship program is where is it going to be situated within the business. I would strongly suggest that an apprenticeship is not going to be successful unless you have a very strong buy-in from senior leaders. We're lucky, but again, it didn't happen just by chance, that our key CEO here in the UK, our lead in the UK, is a huge advocate of apprenticeships. So I found somebody who is brilliant at the communication internally and externally, somebody who is always keen to put together an article or attend a celebration event, but who is very much that face and that advocate of what we're doing with our programme. Ultimately, too, the apprenticeships need to have a business benefit. So we actually write our apprenticeships into our business objectives. We have very, very clear return on investment indicators and performance indicators for our providers. We also make sure that we tap into our senior leaders and involve them in any communication that we require, any promotion, for example, in the business. And another key thing is to make sure that your approach to your apprenticeship, your strategy, aligns to some of the other key associated processes. So ours aligns to our Learning and Development UK strategy, our HR strategy, and also our recruitment, our talent acquisition strategy. We've also found, as we've been moving along this last year, that the apprenticeships are exceptionally helpful in things like external kite marks. We've just had re-accreditation under Investors in People, and our apprenticeship programme was a huge part of us gaining the level that we did. It also is important for those of you that might be working with public sector contracting, because quite often apprenticeships are a requirement of tendering processes. So actually being able to talk very knowledgeably and having very good data on how well you're engaging with apprenticeships and the benefits that they are bringing in terms of performance and effectiveness for your company can go quite a long way in terms of tendering processes. So that's the strategic way of looking at your apprenticeship. Now I want to bring you into some of the practicalities. We had a little bit of a lead-in time, and I strongly suggest that you do think carefully and give yourself that space to plan. We brought all of our key stakeholders together in the form of a project group. We then set up separate work streams that focused on key elements that we needed to achieve. We had very tight deadlines that we needed to meet, but it kept everybody focused. It enabled us to make sure that we didn't duplicate effort. We wanted to ensure that we could use as many of our existing systems and processes as we could to ensure that A, we were efficient, but B, that the language and the way of working wasn't actually going to be onerous for people. We also thought very long and hard about the communication, because that is not just a one-off, and I have to say that is something you need to give a lot of thought to, and I certainly still do an awful lot of work in terms of communication internally. It's about keeping the interest levels of people up. It's about making sure that they know what's available, how easy it is to get onto an apprenticeship, but also the responsibilities and commitments. I mean, 20% off the job, which I'm sure you've all heard of, is something that has to be brought out in the open, has to be talked about, has to be clearly communicated to managers about their responsibilities in ensuring it happens. I've also found that you need to do it with the apprentices to make sure that they take it, because they usually are so tied up with work they forget if they're not careful. But it's that, but it's also the benefits of the apprenticeship with everybody, so that they can see the personal benefit that they get both as a manager and as an apprentice, but also the benefit to their teams, to their division and to the business as a whole. And we also decided to go small and then grow gradually, which is why we started off with around 30. By the end of this year, we will be over 100. And we actually chose to recruit in cohorts. So we do 3 a year, January, June and October. Those timeframes are because they suit the business. The October cohort, because that suits some of the academic level 6, level 7 programs that we're working with universities on. But it also gives you breathing space to plan and to ensure that you trial some new standards, for example, with small numbers before growing them into bigger numbers. So our key stakeholders, and remember this will be different for different organisations and sizes of organisations, but yeah, a senior leader is your sponsor, absolutely critical. As I've said, finance. We situate our apprenticeship programme in HR and we align it to learning and development, which gives us the ability to promote, to cascade, and to encourage people to get involved with apprenticeships and to inform them. And with it being part of learning and development, we align the apprenticeships to our existing offer, but also then can see where the gaps are. If you have a talent acquisition team, then getting them on board, absolutely important. It helps enormously when working with the training partners in terms of utilising their skill set aligned with the way that you like to recruit into your business. It's given us the opportunity really to look at different ways of attracting different types of groups into our business. So for us, that's really worked very successfully. Definitely link up with your reporting systems. We have done a lot of work with our recruitment system and our HR system to ensure that we can report on apprentices as they come in, and that we can actually follow apprentices as they move through the business, and also their job role changes and line manager changes, which we think is going to be really important data for us in the future. And then ideally having somebody who's involved in the programme who has got some understanding of apprenticeships, perhaps has worked in connection with government funding before with the ESFA as well. So I would suggest those, if you've got them, are your key stakeholders to get going with. Right then, a general introduction to the Education Skills Funding Agency. You might have heard of them, you might not have done, but they're absolutely pivotal in terms of you being able to set up and get working. They set out the funding rules that you need to follow. They make sure that you use the digital apprenticeship system correctly. They also ensure that you're on the right register, as whether you're an employer or an employer provider or whether you're a training provider. They have a very good mechanism of support through the National Apprenticeship Service. So we, for example, have an apprenticeship account manager that I work very, very closely with. They are also the organisation that your training providers have contracts with, and they will, for example, pull down additional monies for functional skills support if your apprentices need them. And they also do monthly uploads to the ESFA through the normal uploading system that triggers the release of funds from the digital account system. So the ESFA is really critical to the tripartite arrangement between the HMRC, yourself and them. I am definitely not going to go through the funding rules for you, but just to say that as an employer, you do need to be very much aware of what the funding rules contain. You will be signing a contract with the ESFA, and there is a requirement in there for you to follow the funding rules, and there are penalties if you don't. So just to give you an example, there are a few, but there is one that's specially written for employers, another one written for employer providers, another one for training providers, and then you have the apprenticeship common funding rules, which are generic. But the generic ones give you a really good understanding of the outline of a decent apprenticeship programme. So things to bear in mind, some of the things around early leavers and how they're considered, what to do if you've got somebody that goes off long-term sick. So do read those first. I would then read the employer ones, and then even if you're an employer and you're using training providers, I would read the training provider ones as well. And that way you know what your training provider has to do in different circumstances, and you'll become far more knowledgeable about what you're seeing in the digital account system every month, particularly if you have people that are leaving the programme early or successors, etc. So really important that you follow those funding rules. And do read the agreement in detail that you complete with the ESFA that sits in the digital account system, because it very clearly says what happens if you do not follow the funding rules. Okay, I think I'm handing over to Beth.
Thank you, Anne. So just to recap, my name's Beth Briscoe. I'm the Employment Tax Manager here at Pearson, and I'm responsible for the finance aspect of our apprenticeship levy. So I'm going to walk you through the levy funding rules and just outline the key considerations and talk you through the funding bands and how they work. So what are the funding rules? So essentially they're a framework of standard terms and conditions setting out guidance under which levy paying employers are expected to operate. Now they are regularly updated, so it's essential for all levy paying employers to keep on top of updates and to be aware of the latest ESFA funding rules. And these can be found on the ESFA website. The next update is scheduled to take place in August 2018. So once they're published, it will be important to note any key changes. As Anne mentioned just now, any failure to comply with the rules may result in a breach of employer agreement, and it could be financial penalties. As Anne also alluded to, the rules are fairly extensive, but we would recommend that you take time to go through them to ensure that you're familiar with how you should be managing your apprenticeship programme. However, for the purpose of our presentation, we just wanted to highlight to you a few of the key considerations. So first of all, it's a common misconception that the purpose of the apprenticeship levy is to cover the cost of all training of an apprenticeship. So broadly speaking, the levy covers the cost of training and assessment only up to the limit of the funding band. Any cost in excess of the funding band would need to be covered by the employer themselves. It's also worth noting that there are a number of costs that are not eligible to be covered through funding. So by way of a couple of examples, so wages for apprentices, so you cannot cover any cost of their salaries through the funding. Inductions, enrolments and prior assessments are also not available. Any travel costs for apprentices and certain specific services which are not related to the delivery and administration of the apprenticeship. So this includes, for example, the recruitment and continuing professional development of staff involved in apprenticeships and company inductions and things like that. There are a number of costs which aren't covered, so it's really important that you familiarise yourself with these under the latest rules. Moving on to the funding bands. So every apprenticeship standard and framework is allocated a funding band between £1,500 and £27,000. At present, there are 15 funding bands which were introduced in May 2017 when the levy was introduced. I guess the term funding band is slightly misleading, as they shouldn't be considered fixed prices or a rate set by the government. Their purpose is to reflect the maximum limit the government will contribute towards an apprenticeship. So potentially, an employer could agree to pay more than the funding band maximum, and if they do so, they would then be committing to pay the difference between the upper band and the agreed costs themselves. The expectation of having these bands was that employers would negotiate with providers on the price. However, that doesn't actually seem to be happening, and at present there's limited price negotiation in the market. So as a solution, the ESFA have reviewed this structure to assess whether the existing 15-band framework supports employers with gaining value for money. As a result of feedback from stakeholders, the number of funding bands is due to increase from 15 to 30. There will be newly developed standards incorporated into the 30-band structure, and the hope is that they will help support negotiation between employers and providers on price. I think in general it's probably a positive move that the ESFA are taking steps to implement a better framework to help support negotiation, and I guess we'll just have to see how it works in practice. Undoubtedly there'll be more to come on this, so I guess watch this space. And I think I'm handing over to Anne now.
Right then, I just wanted to do a brief introduction to the Digital Apprenticeship Service, and DAS for short, so if I can call it DAS from now on, that would be lovely, otherwise my tongue is going to get terribly twisted. So what does a DAS do? Well, I have to say it's your main interface with your training provider, with HMRC and with the ESFA. It is the one system where all of the interactions, the financial transactions all take place. It's important also because it's where all the legal agreements between yourself and the SFA sit. They're templates in the system, and then you literally tick a box to say you've signed them. But obviously you need to make sure you read them very thoroughly and make sure you're happy with what you are signing to. It is where all the PAYE schemes need to be uploaded. It's where you can find training providers if you're looking for them for delivery for you. But I would say that's quite minimal, and it's a bit of a lottery. There's no quality control in that element. It's just literally a list of providers against the particular standards that you're interested in. The main part of the DAS that you will certainly look at and use on a regular basis is the managing of apprenticeship information. That's where you load up your apprentices. It's where all their detail is. It's where you can look at their progress. You can look at how much money you've spent on each of them, how much of them is worth, their start dates, their end dates. And then you've got the finance section where you can actually track how much of levy you've got sitting in your pot at the moment, how much you've got going out to your training providers, and also how much now has been allocated to transfer of funds. And Beth is going to do some more on that a little bit later. Okay then, so some of the key responsibilities that sit within operating the DAS then is the fact that you have this agreement between yourself and the ESFA, but also you need to have a bit of an informal agreement between yourself and the training providers about how you want to use the system. First question really is who's going to upload the apprentices when they come on? We have found the easiest way is to let the training provider do it. And the reason being is if you do it, you don't have all the information. You then send it through to the provider. They then add the additional information. It then comes back to you for approval. If there's any mistakes, you've got to send it. Honestly, it's a toing and froing that will make you dizzy. So the easiest thing is to let the provider do the upload for you then to approve it or not if there's some errors. You have to approve everything before it formally starts as an apprentice. And that is because it is HMRC and yours money that's going out. And of course, you can't work with a training provider unless they have been approved on the register of training providers and have a contract. You just will not have that digital link set up through the system. So I'm now going to take you into the DAS. So you'll get to see a little bit of how it looks. So here's a screen, which is basically one of your opening screens. And it's a pretty standard screen. They've all become standardized now with the Dove.uk website. And this is something that you just literally see every time you go in. And it just asks you whether you've used it before, if not first time, etc. So it's pretty straightforward, very clear. However, at the very beginning, when you get into the DAS, you need to actually have the agreement. And this is what it looks like. As I say, it's very simplistic. The agreement sits behind the link, and you literally just go in and you tick to say, yeah, I'm happy to agree to this. And you can see there that we have ours enabled, which means, of course, that we are live. Here is a screen with the PAYE schemes, and these are just an example. I know some employers that have got over 10, 20 different schemes that they've had to actually put into the system. And that does mean that Beth and her colleagues had to do a huge amount of work behind the scenes to ensure that we knew the allocation through our UK business so that we could actually upload it appropriately into the system. And there are different ways of allocating the PAYE into the DAS, but that's for you as an individual business to decide what best works for you. So that's sort of the background to setting it up from a finance point of view. The other thing then is to decide who in your business do you want to access the system. And we made a conscious decision we would not have too many people in the system, but we did want some key people. So obviously we wanted Beth and also Beth's manager as well. We needed me, and we also needed my program manager who does all of the checking of the apprenticeship information as apprentices are put on by the providers. Okay, so through these slides, we've actually put little tick boxes for you, so I hope you find that those really useful. Viren has left the business and it's now Beth, so wherever it says Viren, it's actually Beth. So apologies for that one. And here's an example of what that screen looks like when you put them on. Very simple, literally email address, active, and they're on the system. So you don't have to worry about that again once you've got it on. And also very easy to take people off. So again, very straightforward. And that's how you invite them. All done through the system, nothing needed outside of it at all. So in terms of training programs then, you can't do anything until you know the UK PRN number for your provider. And interestingly enough, you don't enter it just the once, but every time you enter an apprentice to have them start on program, or a group of apprentices, you have to key in the UK PRN number again. It's just a system thing, and there is actually places in the system where you can give feedback to the ESFA, because this is still in beta mode actually, because they're constantly updating and changing it. So we decide to do cohorts, and we found that that really works well. Our training providers also ensure that they upload in a cohort. To be honest, what that means is if somebody is uploading learners, they do it in one sitting. If they do it at the end of the day, leave the rest until the following day, it then becomes two different cohorts, and that can cause an awful lot of confusion for the provider and for us. So there is some little nuances in terms of just using the system that you will find get easier and easier once you're more proficient with it. Again, a screen here just showing how you add it. It's very intuitive, very simplistic. There you go. Yes, I'd like to add an apprentice. And you do need to know some certain things. So the main reason really why we ask our providers to upload the learners for us is that we don't know the unique learner number at that time, because they are the ones that do the uploads to the SFA, and they also are the ones that do the enrolment on our behalf, so they know the individual learner record start and end date. We have an understanding of what that is, but we would like to see it and follow it absolutely correctly, so hence the providers do that one for us as well. And it's very, very straightforward. I'm not going to say anything more on that, to be honest, because it literally follows a very simple process as per all the other things within the DAS. This is quite an interesting screen. This is where you get an alert that lets you know that there is a cohort waiting for your approval from the training provider. And it's also here where you can send emails to the training provider, letting them know that you have put something in the system for their approval, or that you have approved something that is now ready for the next phase of the process. For us in Pearson, in terms of the team that manage the apprentices, this is the most important part of the DAS. So if ever I want to go and look at any of our apprentices and double check what program they're on, how much money I'm paying for them, their planned end date, this is the section I go to. They're all in there. Interestingly, alphabetical order search on Christian name, not surname, which is a little weird, but c'est la vie. But you can certainly do some sorts. This is also where you archive apprentices that have left the program, where you also archive those that have left without completing. It is literally just the main element where you can manage your cohort of apprentices and see what's happening with them. This is the element where you can see the transactions. I mean, obviously not too much here, but I, for example, now see in my monthly screen all of my providers and how much I have paid them the preceding month. I see how much money is in my funds. I also then see how much is coming into my fund that month as well. So it's very, very clear. I can then drop down into, say, one of my training providers, and I can see exactly how much money I spent on them that month against every single program of learning. And that's quite beneficial to you as an employer, because you can just double check things. I mean, we've had some funny things going on just recently where we've seen nothing going out for some months and then suddenly a big jump in another month. And straight away, you can see that very clearly as the employer, and then you can question and pursue that and investigate it a little bit further. Right then, I am now handing back over to Beth for transfer of funds.
Thank you, Anne. So with the transfer of funds, there's been a lot of anticipation about the introduction of this arrangement, and it was back in February this year that the ESFA published guidance providing further detail on how it was expected to work. I think it's really good news for any companies who are struggling to use their levy themselves, or anyone who has substantial funds sitting in their account. So in terms of the timeline, the arrangement was introduced in April 2018, so it's still very much in its infancy, and I guess there hasn't been that much lead time between the kind of guidance being published and the arrangement coming into effect. So those of you who have access to a DAS account may have noticed that a transfer allowance appeared in April. So this allowance is an annual transfer allowance which has been calculated by HMRC at the start of the year, and it's based on the prior year levy amount declared to HMRC. There is a set limit set on the transfer, so levy paying employees can transfer a maximum of 10% of their annual funds to another employer, and that includes the 10% government top up. Last month, so May, was the first month that employers were able to start transferring funds. So like I said, this process is very, very new, and it'll be interesting to see how it evolves. In terms of how the transfer of funds works, it's being managed in phases. So initially, employers are able to transfer funds to one other employer. This number is expected to increase over time and after the ESFA have received user feedback following this first phase. In terms of the use of transferred funds, so funds that are transferred can only be used to pay for training and assessment for apprenticeship standards only. The funds cannot be used towards apprenticeship frameworks. They can also only be used for new starts, so they cannot be used in respect of apprentices that started before the 1st of May 2018. Funds will be transferred on a monthly basis to the receiving employer from the sending employer's apprenticeship account. And similarly, if an apprenticeship stops, the payment transfers also stop. So if you're an employer who's considering transferring funds, there are several different ways that you might want to go about identifying an employer who could be interested in receiving funds. So you may want to harness an existing business relationship by working with an employer in your supply chain. Alternatively, you might want to get in contact with employers in your network or industry. Any employers that are looking to receive funds would need to ensure they're registered with a DAS account to receive those funds, and also they need to sign an agreement with the ESFA, which is located in the DAS, which Anne took you through earlier. So I guess the obvious question is, why might an employer want to consider transferring funds? And I guess the most obvious answer is that it's a good way of optimising use of any unused levy. So I know that many businesses are still struggling to use the levy at all, and many who are using it aren't able to use it to their full effectiveness and still have substantial funds sitting on their account. By using the transfer of funds arrangement, it means that funds that would otherwise sit in the service can be used or can be put to good use. Currently, we're also facing the challenge that levy contributions have a 24-month lifespan and work on a use it or lose it principle. Therefore, employers who have substantial funds sitting in their account may want to consider transferring funds to another employer to help minimise any amount that they might need to pay back to the Treasury at the end of the life of each individual payment. Another reason you might want to think about transferring funds is that it's possible to direct your funds strategically in a way that benefits your business. So by transferring funds to an employer in your supply chain, you're working to improve the skills in that supply chain, which in turn can benefit your business. You can also help meet your organisation's needs by allowing the supply chain to develop skills which would meet your organisation's needs. It also allows you to help retain skills in your sector or encourage new skills to be developed. It's also a really positive way of creating opportunities to support more people into apprenticeships, and that's by inspiring more young people into a career path, but also similarly helping more experienced professionals to gain new skills or experience. You may also want to consider transferring funds from a corporate social responsibility angle. Depending on your business goals and strategies, you might want to transfer funds from a CSR perspective, for example, to support a local charity. So lastly, I just wanted to cover off a few considerations for any employers who might be thinking about making a transfer. So it sounds obvious, but initially you want to check that you have enough funds in your account to transfer to another employer. And that feeds into the importance of forecasting, which I'll come on to after this. On a similar vein, it's important that you have a clear understanding of the total forecasted cost. So by agreeing to transfer funds to another employer, you'll be committing to cover the full duration of the apprenticeship you've agreed to fund. If you're funding an apprenticeship which lasts beyond a tax year, you'll need to consider whether you'll have enough funds to continue paying for that apprenticeship in the following year. It's also really important that you agree the details of the apprenticeships that you're funding and that you're aware of the funding rules. Kind of goes without saying, but you cannot transfer funds to another employer if you currently have an apprentice who is funded by another transfer. It's also important that you ensure that the appropriate upfront planning is done and have the necessary arrangements in place, because once the transfer is made, it cannot be refunded back to you.
Just to flag a question we've had to come in on transfer of funds. Somebody's asked, can you transfer funds to organisations who don't pay the levy as well as levy paying organisations?
Any employer can. Absolutely, yes. You can actually transfer funds to any employer, whether they're a levy-paying employer or not. The only, I guess, limitation is that if you are receiving a transfer of funds from another employer, you then in turn cannot make a transfer of funds to another employer. So you can't be a receiving employer and also a sending employer at the same time.
Okay, we had another question just come in. So it's around the 10% transfer. Does that 10% include the government top-up, or is that on top of the 10%?
No, it does include the 10% government top-up as well, yes. So moving on to forecasting now, so I want to talk a bit about that. So I know that for many businesses, this first year of this new apprenticeship levy has involved getting to grips with the new process, and many businesses have experienced challenges in terms of how they actually use the levy. So whilst forecasting and budgeting for the levy itself may have been a priority, there may not have been as much attention on forecasting the spending. So now we're just over a year into the new process, and at this juncture, many of us are mindful that any unused funds will expire after 24 months. And just to talk a little bit through about how the expiration of the funds works, it's calculated on a rolling basis. So the first levy contributions, which were made in May 2017, will expire 24 months later in May 2019. Similarly, the June 2017 payments will expire in June 2019, etc. So the service uses a first in, first out methodology. So it allocates any spend against the levy which entered the account first. And at the point that payment expires, any unused funds will be paid back to the Treasury. So right now at this point, we have just under a year until May 2019, which is the first point at which the first tranche of funds paid into the pot in May 2017 will start to expire. So we as businesses have time, if we haven't done so already, to start planning how we can minimise or delay any payback to the Treasury. And as such, forecasting spending is likely to become increasingly important for many businesses. It's probably worth mentioning that the ESFA are developing a forecasting tool which will sit within the DAS, but until that point, it's really up to each of us as a business to determine how best to forecast. For us at Pearson, forecasting spending has been critical in terms of balancing out the need to utilise the levy against the risk of overcommitting funds and going into co-investment. And there are obviously several different ways in terms of running forecasts, but we've set out some steps which we've used, which you also in turn might find helpful. So the starting point is to understand how much you expect to contribute into the fund by determining a reasonable estimate of future levy contributions. So as we explained before, the levy is calculated on your wage bill. So we suggest that you estimate the annual wage bill, and although it's an estimate, it's really important to try and capture as much detail as possible and to incorporate any planned changes which might be happening in your business. For example, if you know that your business is going through some kind of restructuring, it's really important that you capture any increases or reductions in workforce. It's also important that you factor in any expected termination payments or bonus payments, as these will attract apprenticeship levy charges. It's then important to kind of break this down into a monthly breakdown of your wage bill. It's important as obviously wage bills fluctuate month by month, and in turn, the levy payments will fluctuate too. The levy should then be calculated on the monthly wage bill at 0.5%, and the monthly portion of the £15,000 allowance should be deducted. Finally, the government contributes a top-up amount of 10%, which should be included. So once you've determined a reasonable kind of levy contribution, you can then start assessing your monthly spend. And to do that, we suggest that you determine how much you plan to spend on each apprentice. And our suggestion is at this point that the endpoint assessment, or the EPA cost, which can be up to 20% of the apprenticeship cost, is not included. You'll then need to plan when the apprenticeship programme will start and the duration of them, and also when that EPA will come out. You can then go think about plotting the expected monthly spend against the levy funds coming in to make sure that you can cover all the outgoing payments. And lastly, if you have decided to make any transfer of funds to another employer, it's really important that you include it at this point. I think it's probably also worth pointing out that planning is essential to ensure that you have adequate funds to cover apprenticeships. If for any reason you run out of funds, you may be required to go into co-investment. So that's where the government funds 90% of the apprenticeship and the business funds the remaining 10%. So once you have the details of the actual contributions that you've made and the amounts you've spent, you can update your forecasts and to reflect the actual position and make any necessary adjustments to the remaining forecast. We at Pearson collate summary information detailing the spend with each provider and the money coming in each month and share that with our wider project team. And we've found that information gathered through this exercise is really useful, not just from a budgeting perspective, but for internal reporting. It's a really useful way of presenting the return on investment for the apprenticeship programme to senior leadership, and also gives us a good overview of the training providers that we're using and helps us to forecast how we'll use them in the future. So this slide basically moves on to the topic of paying back contributions, and we've already talked a bit about the 24-month lifespan of contributions and the allocation of funds and the first in, first out principle. So the challenge that we faced at Pearson was kind of understanding the bigger picture, and specifically how our forecast showing monthly spend against contributions translates into exactly how the spend would be allocated against our levy contributions, which funds were at risk of remaining unused after 2 years, when we'd need to start paying back to the Treasury, and more critically, how much we need to start paying back. So one thing that we found really useful was to put together this chart to help others within our working group, as well as senior leaders, to understand the life cycle of each of the payments. So I've put together this mock-up to demonstrate the type of visual that we've designed. So if you take a look at it, each bar represents the 24-month lifespan of each levy payment. Along the bottom, we can see the month and year that each payment was made. And along the left-hand side, we can see the period of time and the lifespan of each tranche. The darker orange shading reflects the period that the levy payment has been paid into the service, but is not yet being allocated against spend. So effectively, at this point, the tranche is dormant. The green shaded area reflects when the levy payment is essentially live and monthly spend is being allocated against it. And the yellow portion at the top reflects the period of time that the tranche has been fully utilised but has not yet expired. And the amount that sits at the top of each bar reflects the outstanding balance at the end of the lifespan of each tranche. So if we take, for example, the May 2017 bar, we can see that a payment of £70,000 was paid at the beginning. The green shaded area shows when the tranche is live and spend is being allocated against the payment. So we can see that the monthly spend between June and December 2017 was allocated against this May 2017 payment, and the payment was fully spent in December 2017. The rest of the bar, shaded in yellow, shows the amount of time that the tranche will be fully used until it expires in May 2019. So at May 2019, at the end of the fund's life, there are no unused funds remaining, so nothing to pay back to the Treasury. Similarly, looking at the June 2017 tranche, a payment of £80,000 was made. Orange shading reflects the period of time that the fund was lying dormant in the account waiting to be used. And once the May 2017 fund was used up in December, spend was allocated against this fund. The green shaded area shows that December 2017 to March 2018, spend was allocated against this payment. And by the time this payment expires in June 2019, all the funds will have been used, there's nothing to repay. Looking at the top of this chart, you can see a red dotted line which indicates when this company would need to start paying back to the Treasury. And this chart indicates that this company wouldn't need to start paying back until February 2020. And the first payback due relates to the levy contribution made in February 2018, which amounted to 75k. However, the chart shows that there will only be £25,000 of this tranche left at the expiry date, and therefore this is the amount that will need to be paid back to the Treasury. The chart also shows the forecasted level of monthly paybacks after this point, which is reflected in red at the top of each bar. So this chart can also be used as a reference tool to see which tranche the monthly spend is being allocated against at any particular time. So for example, if we want to look at which tranche our current spend for June 2018 was currently being allocated against, we'd look on the left-hand side for June 2018, then look across and see that the July 2017 tranche is essentially live and currently being used. And this tranche is expected to be fully spent in July 2018. So I guess there's a few interesting points to note from looking at this mocked up version of the chart. And there's obviously an appetite to avoid or minimise the need to pay back funds to the Treasury. And the obvious way to do this is by minimising the kind of green and orange shaded areas and maximising the yellow top shaded areas to push back or minimise those payments. And I guess this visual kind of shows that this mock company is heading in the right direction. The May 2017 tranche took 7 months to spend, yet the June 2017 tranche took 4 months, so that's probably due to increased spend. There's obviously no requirement for companies to produce an identical chart to this. It's just something that we found really useful internally, just to kind of share the bigger picture and how the levy is working. So hopefully it's something that you might find useful.
Okay, so we had a couple of questions stroke comments there about that last slide, people asking if we can send it out to be used by other employers. I mean, I think, Anne, you mentioned that the ESFA were going to be introducing a forecasting tool of some kind.
Yeah, they're going to put one into the digital apprenticeship system, but they haven't said when that's going to be. It's going to be sometime this year. Okay. And Beth's designed this. We also have a spreadsheet that we use behind it. But the key thing for us to think about here is that the more apprentices you bring on through the year, the more you push out that time at which you pay back to the government. And if you haven't started to bring apprenticeships on as yet, then there's a big lot of your levy pot that has already gone basically to the government and will go in April 2019. So yes, we'll be more than happy to share this.
Yeah, I mean, just to
sort of clarify that it's illustrative, and I suppose the main takeaway there is that it's a fine balancing act between what's coming in and what's going out, and the finance really needs to get on top of that.
Yeah, and I mean we forecast every month, so we're constantly looking at what our spend is, and also looking at our pipeline of apprenticeships coming in, so that we can see, for example, because we do cohorts, we can actually see our predicted October, what that's going to do to the figures in 2, 3, 4 years' time. And it's important to do that because we don't really want to go into co-investment, and because we are interested in doing the transfer of funds, we want to ensure that there is enough money in our allocation for that.
Okay. So I'm going to now take control and do a bit of a wrap up for the session. Obviously, thank you very much to Anne and Beth for their presentation. It's a lot. There's a lot there. There's a lot to absorb, and I'd point you towards information we have on our website. There's a lot of useful things, fact sheets, downloads, and also content on the website that can help you with getting to grips with Apprenticeship Finance. I'm just going to relaunch the presentation. And I also wanted to mention, if you're particularly interested in using the DAS and how to get to grips with that, we had a webinar last year which was solely dedicated to that and was very in-depth, and there's a recording of it on our website. So if that's something you want to know more about, you can consult that. So first thing to do in the wrap up is to deal with questions. So I've had a few coming through. I'm going to go back through those and then pose them to the presenters. So the first one that came in was around the DAS, and it is it possible to export apprenticeship data from the DAS other than just financial transactions?
No, it's not, because that is detailed information on each of your candidates. It just purely sits in there. The only thing you can export is the financial element of it, and there is a built-in spreadsheet to do that.
Okay. We had a question which we've already covered around the transfer of funds and who that can go to. We had also the question around the 10% and whether that includes the 10% government top-up, so we've covered that. And then we had the question around the final slide and the life cycle payment chart, which we've covered. And then we had another request, I believe. Somebody's asked for the spreadsheet that we covered on the last slide, whether they could have a blank version of that to fill in. I'm sensing that it's quite organisation specific.
To do that. However, if you have an apprentice who's doing the data analyst apprenticeship, perfect work-based project for them to design that spreadsheet.
Okay, good suggestion. And I mean, I don't know, who's out there in terms of the audience, but if that last slide didn't quite, it seemed a bit complex, bear in mind that Beth is a finance person, a very experienced finance person, so it wouldn't necessarily make sense at first glance. It's more there to illustrate the importance of that planning and forecasting, and that's crucial to making sure that you maximise your return on investment in your levying, actually spending the money rather than losing it. So an opportunity now for any further questions before we move on. Okay, we've had another one come in. How can you transfer funds to a non-levy paying company? Do they need an account?
They will need to be registered with the ESFA. They will need a UK PRN number because you have to have that agreement through the digital apprenticeship system. And yeah, they need access to the digital apprenticeship system because the receiving employer takes over all the responsibilities for managing the apprentices that are being funded this way. So the sending employer, i.e. us, in this particular instance of us using transfer of funds, we won't see those apprentices in our version of the DAS. We won't see anything at all other than the money that goes out each month to the receiving employer.
Okay, so a non-levy paying employer would use the DAS anyway, even though they're not dealing with levy payments.
Just being given access to the DAS. The DAS has only been available for big levy paying employers, but as from May, it's now being opened up to small organisations. I would say the transfer of funds is particularly of interest to those employers who are paying the levy but not paying very much, where perhaps their monthly payments are not enough to fund the type of apprenticeships that they want to offer or the number of apprenticeships they want to offer. So in many cases, the employers will already have an access to the DAS, but if not, they have to be registered.
Okay, thank you for that. So last chance for any more questions. That concludes today's webinar. Thanks to my presenters, and thank you all for attending, and hope to see you again for future instalments in the series.